So yeah, we'll just let everyone trickle in here. So we're gonna be talking about options trading using algorithms today, and have some cool information for you guys. I think this will be really valuable. And if you guys have any questions, feel free to chime in and throw anything into the chat that you may have. So got some more people coming in. So we'll go ahead and get started now. Let's jump into it. So the agenda for tonight is going to be first see who is on the call, who's listening in. I'm going to give you guys a bit of an intro on myself as well as LumiWealth and the course we're going to be doing here. Next, we're going to jump into algorithmic options trading. So we're going to go through some details, give you guys some information, kind of set a foundation for algorithmic trading with options here. And then we'll jump into a demo. I put together some code that we're going to go through. One will be a code snippet of something that's a bit more complex. We won't dive into it as to not overwhelm anybody. But the other will be just a super basic level, no rhyme or reason for the strategy itself, but just some code that essentially just demonstrates some options trading in an automated fashion so that you guys can see how that works. And we'll go through some details on the course we're going to be offering here towards the end of the month. And then if you guys have any questions at the end, feel free to ask. And that being said, while I'm going through the presentation with you guys, if you have any questions, anything that may pertain to you in particular as well, I'm always happy to stop and clarify anything that may require additional clarification, or if you have a question that is specific to what we're talking about, feel free to chime into the chat and ask away. I'd like to say that enjoy having a conversation with you guys rather than talking to you guys. So it always works best when you guys are chiming in and communicating with me. So first off, I want to see who is on the call. So go ahead and type out in the chat for me, if you could, what is your occupation? Then do you know how to program? And if you know how to program, what languages do you know? What kind of experience do you have in programming? And then lastly, how much investment experience do you have, if any? Are you more of a long-term trader? Are you a short-term trader? If you're a short-term trader, do you do swing trading, day trading? What kind of experience do you have? And do you have options trading experience as well, like we're going to be talking about here? So if you guys wouldn't mind just typing it out into the chat, just answers to these questions, that will kind of give me an idea of who's on the call here and help me kind of go about this in a way that will be most valuable to you guys based on some of your expertise and experience level with all of this. So give you guys a second to type that out. I know there's a little bit of a delay on my end for this to show up. So I'm going to wait here and pause for a brief moment. And I guess I'll go ahead and answer these questions myself so that you know a little bit more about me. First off, occupation. My occupation is I am an algorithmic trading developer. I've developed at this point hundreds and hundreds, if not thousands of trading algorithms for myself, for retail traders, for hedge funds, variety of financial institutions. So I haven't necessarily seen it all, but I've seen about as much as one can in the period I've been doing this for. Do you know how to program? Yes, I do. Mainly code in Python, and that's what we're going to be focusing on in the course here. So if you have Python experience, that will be fantastic. If you don't have Python experience, then that is completely fine. We'll give you a base understanding and leave you with the knowledge to successfully do it on your own at the end of the course. Then investment experience. I actually started out as a full-time trader while I was in college, so I have a little over 6.5 years or so of trading experience. Not so much long-term investing, but I started out day trading, and then now I do more swing trading with the trading algorithms that I develop. So Zachary Fuller says, at the moment, repair technician. or sorry, ATM repair technician. Very interesting. Do not know how to code in less than 1 year of investment and trading experience. That's fantastic. So you're coming into this fresh, which is great. I think getting into a structure like this is extremely valuable to begin with. I started with piecing together YouTube videos and posts on Stack Overflow, and I looking back on it, I really wish that I had a platform like Lumi Wealth here that we're putting out there to be able to learn this stuff instead of trying to hack it through by myself, because it is a very strenuous process learning how to code and also really grasping these fundamentals in finance for algorithmic trading as well. So Zachary says, sorry, didn't hear what you just said. Let me know if I'm cutting out or if there's any issues on my end. Maybe I can refresh my microphone if I'm cutting out or something's going on here. Yeah, anyways, William Barber says, I'm a project manager taking intro classes on programming and then about 5 years of investment experience. Fantastic. Very cool. Tim P, I'm a blue collar worker trying to learn to code and trade. I will be a project for you. No, you won't be a project. I've been in your shoes. I know what it's like being there. I've been in your shoes not too long ago, really. So feel free to ask as many questions as you want, Tim. I love starting from scratch if need be, and seeing how far you can take it. So I'm sure you're a smart dude. I'm sure you be able to grasp this pretty quickly and get you off and running. Okay, so let's go ahead and move on. That's who's on the call. If anyone else wants to chime in, I know we have some more people on the call. If you want to chime in, see who else is in here. But if not, that's no problem. So let's move on from that. Introduction, who am I? Again, my name is Nathan Miller. I'm an algorithmic trading developer. I mostly do so freelance, and have done a lot of work with past Lumi Wealth and current Lumi Wealth clients to develop custom trading bots for them. And then, like I said, I actually started off before I got into algorithmic trading development. Started off as a full-time trader, so have that background as well, and still do some trading myself. So what is Lumi Wealth? Lumi Wealth is a company that offers algorithmic trading courses and pretty much puts together a community of algorithmic traders who are learning and really in a variety of different levels from an investment standpoint and a coding standpoint. So the main focus with Lumi Wealth is really trying to help a lot of people get up to speed with algorithmic trading, learn the skill set of it, learn coding to get to the point where you can develop your own trading algorithms yourself. So that's super exciting. There's a lot of calls similar to what we're going to be going over on options trading, as well as some other topics on our YouTube channel. So that's going to be you see the link there, just YouTube/Lumi Wealth. You can type that in, or just search Lumi Wealth into the search box there. Again, lots of free content on there. Adding a lot more. This call will probably be up on there as well if you want to get a recap or rewind everything. Check out our Discord channel as well. There's that link. I know you probably can't copy and paste from the presentation here, but if you can, just take a second. If you want to just kind of type that in to your browser or wherever, that's our Discord channel. Discord channel is a great place to connect with other people who are currently in courses or maybe have been in past courses. A lot of people really like to share ideas and collaborate. Great way to find trading partners if you're interested in that. Maybe try sourcing some different trading strategy ideas. That's a great way to do that, and just cool to connect with like-minded individuals who are interested in algorithmic trading and learning it, or have already learned it and are further down the road. Very, very cool community that we have going on there. And then, like I said, just briefly a little bit ago, please feel free to ask any questions throughout the presentation here. Interactive presentations are the best. always enjoy communicating with you guys, talking with you guys, rather than talking to you and trying to expect what you want to hear. So again, feel free to ask any clarification questions, bring up any points, anything you want me to touch on in addition to what we're discussing. Very happy to do so. So we'll move on from that. All right, so first off, algorithmic options trading. So we'll go through a few companies. Obviously, this has really become kind of the forefront of the hedge fund world. It's definitely widely publicized now as well, and so we'll touch on some of these companies that have been doing so on the hedge fund side. First off is Renaissance Technologies. They are probably the most popular algorithmic trading firm and the most successful algorithmic trading firm. They currently have, and this may be an even larger number now, but they have $110 billion in assets managed, which is really pretty a huge number, right? That's an insane number, $110 billion. I can't even imagine what that would look like and how you would even deploy that amount of capital into the markets. Think of the number of companies you can just buy whole with $110 billion in assets, right? You buy up probably 100 plus stocks just from a market capitalization standpoint with that amount of money. So what's even more impressive is their return. So they have returned on an annual average basis 39% over the last 30 years. Has been widely uncorrelated with the stock market. So, you can imagine returning 39% annually would be quite a big difference compared to the 10% annual return that you would get in the stock market. So to put those into figures and to quantify that, if you had invested in the stock market, $1,000 invested over 30 years would have turned into $17,449. Over the course of that 30 years. Now, if you had invested that same $1,000 30 years ago into Renaissance Technology, that would be a whopping $19.5 million that you would have returned. So you see the difference just in returns, and that about 30% difference in average annual return from the stock market to a company like Renaissance Technology that is taking advantage of trading algorithms. The upside to that is really quite tremendous. So if you're interested in learning more about this company in particular, the founder of Renaissance Technologies is named Jim Simons. You may or may not have heard of him. He's a pretty popular dude in the hedge fund industry. A book was written about him. You can find it on that link there. It's called "The Man Who Solved Market Revolution." So they discuss algorithmic trading a little bit and discuss a little bit about Jim Simons and Renaissance and try to peel back some layers on the approach that Jim Simons and his team have taken to the market. So kind of a good way to source some ideas as you guys are getting more and more into algorithmic trading. Books like that, when you begin to learn more about different approaches that have been taken, you don't necessarily want to completely replicate other approaches, but it can really be a great source of ideation when you're thinking about what kind of strategy you want to implement from an algorithmic trading standpoint. So some other notable hedge funds that are in the space. Two Sigma is very, very popular. They're well known for hiring strictly developers and programmers, and then kind of turning them into finance gurus that can develop trading algorithms and ideate different ideas there. Citadel is another huge one, so they're a very big market maker, which is another opportunity if you want to get into the more high frequency trading realm of algorithmic trading. And again, the assets that they manage, $60 billion for Two Sigma, $32 billion for Citadel. Pretty huge. Citadel is run by Ken Griffin, who's been in the news a lot. I believe he was the individual who purchased the most expensive real estate property in America. It was something like $350 million in New York City, some penthouse in New York City, which is pretty insane. So you can see, people are doing well with algorithmic trading, right? It's pretty insane. Bridgewater, they've been one of the highest asset under management hedge funds for a long time. They manage $138 billion. They do a lot of data analysis with trading algorithms, not necessarily executing trades, although they might do a little bit, but their main use for algorithmic trading is testing strategies as well as running some analysis for decision making. And then D.E. Shaw is another one that's notable. They're a prop trading firm. They like to run a lot of trading algorithms. And a fun story about them is Jeff Bezos actually started with D.E. Shaw. I believe it was his first job out of college. He went to D.E. Shaw and worked for their hedge fund for a little bit. I believe once he saw the use of technology that D.E. Shaw was utilizing for algorithmic trading, he got the idea to start Amazon and start selling books online through the internet when he saw the power of the internet. And that obviously has turned into much more than just an online bookstore. A pretty impressive company, obviously. He's accomplished a lot. And he started at D.E. Shaw, started for an algorithmic trading hedge fund, which is pretty funny. So let's jump into options, and we'll talk about options a little bit. So why would you want to trade options? There's a lot of different asset classes out there that you can trade. You can trade stock equities, you can trade crypto, you can trade futures, you can trade forex, you can trade options. So why choose options out of all those different asset classes? So first off, options provide a great source of hedging and a great opportunity to hedge investments without the commitment of substantial capital. So an example of why you would want to hedge something like a stock position would be, let's say you have 1,000 shares of Tesla. And if you were to sell those shares of Tesla, you would have to pay taxes on those shares that you sold. And you would have to pay, potentially fees on those orders, right? So instead of selling those shares, you may want to offset some of that risk, because there may be an event that is coming up that you are not so sure about, and you're not quite as excited about holding that stock anymore because of this potential risk that is coming up. So that event might be something like an earnings report. So let's say you have those 1,000 shares of Tesla and an earnings report is coming up, and for whatever reason, maybe you haven't seen as many Teslas driving on the road lately, or you just have a bad feeling about this earnings report. Instead of selling all of those Tesla shares and taking the tax hit and taking the fee hit in the sell order, you can buy what's called a put contract for options, a put options contract, where it's essentially an agreement that if the stock price goes down far enough, those put contracts will be profitable. And the profitability is much greater and much more maximized in an options contract than a single equity. So an options contract represents 100 shares. So it's essentially magnified by 100 times. It doesn't always work that way. There's a lot more details that go into the pricing of options, but just for simplicity's sake, we'll leave it at that. Each individual options contract represents 100 shares of that equity. So by purchasing an options contract, you can get tremendous exposure for a little amount of money. Now, the risk involved in an options contract is much greater because of that volatility that happens in these options contracts. But nonetheless, it does provide different opportunity to hedge certain contracts without having to take certain tax hits, and there's a lot of value in that. Another reason is to sell contracts for extra income on shares held. So the example I just gave was if you wanted to buy an options contract. Now, if you're buying an options contract, obviously somebody's going to be selling those options contracts to you. So you can be on the other side and sell those options contracts. So let's say you have those 1,000 shares of Tesla. Because each options contract represents 100 shares, you can sell 10 contracts to somebody else. And it's essentially a bet on whatever strike price that you've laid out. So you might say, okay, I'm going to sell an options contract to somebody else. And if that price of the stock, in this case Tesla that we've talked about, doesn't reach that certain level, then I get to keep all of that premium and I get to keep my shares as well. Now, if you're wrong and the person who bought the options contract from you is correct, they get to purchase your shares at a specified level and they will profit off of that. But you do still get to keep the premium that you sold that for. So that might be a little confusing. There's a lot that goes into options contracts. Throughout the course, at the beginning, the first couple of weeks, we'll really dive more into options contracts and how they work. And you may find it to be a bit more complex because it is than a standard stock trading. But like I'm talking about, there is just a lot of opportunity with options contracts that is not there with others. So to get over the hurdle of really understanding options contracts is really, really valuable and I think definitely worth it. So another reason would be just to magnify returns on moves of the underlying assets. So like I mentioned, each options contract represents 100 shares of the equity. Because of that, the magnification of returns is tremendous. So if you buy, say, a call contract betting that a stock will go up, if that stock does go up by, let's say, 10%, that options contract could likely go up by 1,000%. So if you've ever been on Wall Street bets or seen anybody touting, these crazy, trades that they've made where they've turned a couple grand into millions of dollars, stuff like that, it's rare, but those are with options contracts. So it gives you this tremendous upside. And again, that comes with much more risk. That's something to be aware of, obviously. But it does give you more upside, which is exciting if you play it right. And then it also offers strategic alternatives like Strangles and Straddles. We're going to talk about, I believe, Strangles a little more later, and I'll show you a code snippet of how we would develop a strategy like that. But what's really fascinating with options contracts is because of that tremendous volatility in swings and price of options contracts, you can set up these different scenarios where you can be profitable, not necessarily making a bet in any one direction. So a strangle, for example, would be if you bought both a call and a put contract where you're betting that it will just move either way, but far enough. And what that bet is essentially making is you're saying that, okay, I know that I can only lose 100% of the money I put into an options contract, but I can gain more than 100% if I am correct, right? So what you're saying when you place a strangle contract where you buy both a call and a put contract is you're essentially making a bet that the price is going to move really sharply in either one direction. And when it does, the direction that it moves and benefits will exceed, the options contract price will exceed 100% gain. So in other words, let's go to our Tesla example again. If Tesla moves 10% or so, and you have both a call contract and a put contract, if it moves up 10%, then your put contract will be essentially worthless if it's out of the money. You're not going to get anything back. You've lost 100% of your money in that put contract. But the call contract, because the price moved up, is now going to be profitable. So if that call contract has exceeded 100% gain, let's say it is, let's say for argument's sake that call contract is now up 200%. We've lost the 100% in the put contract, but we've made that up and actually doubled that in the call contract. So the first 100% gain with the call contract is essentially recouping our losses for the put contract. And then anything beyond that, that next 100% where we get to 200%, we've doubled our money on it, right? So there's no real way with stock trading or crypto trading to be profitable making a bet that it will just move sharply either up or down. You essentially have to pick a direction. So what options trading allows you to do is set up these unique strategic alternatives for your trading and allow different opportunities, which is pretty exciting. So let's move on from that and just talk about why we would want to use trading algorithms for options trading. So obviously, we've talked about options trading. Why use algorithms? So first off, options are complicated, as we were talking about. I may have confused some of you. Some of the stuff may have gone a little over your head. I tried to keep it simple. And again, we'll go into more detail and take more time on this in the actual course to make sure you guys fully understand it. But options are complicated. It's tough to explain. It's tough to understand sometimes. And so with a trading algorithm, what's really valuable is that all that math that goes into calculating the price of options contracts, determining what the future value may be of an options contract if a stock moves in a certain direction and by X amount. The trading algorithm and the computer can do that math for you. You don't have to run through, you don't have to be banging your head against the wall trying to run these calculations by yourself or by hand. The trading algorithm can do that stuff for you, and that's really valuable. Will save you tremendous time, probably save you a lot of headaches. and so it's really valuable in that regard. And then it also allows you to trade when you're away from your computer. So a lot of us may have the goal of, and I know I've certainly had the goal as well of being able to go about your day, go travel, go hit this mountain and go skiing or snowboarding, go to the golf course and play some golf and have a trading algorithm or some type of really anything make money for you. But in this case, a trading algorithm still make money for you while you're doing something leisurely and away from your computer. So it really is exciting to think about. You can really go and do whatever you want. You can work your normal day job if you're inclined. You can go to the beach. You can go skiing. And while you're doing that, the trading algorithm can still be running trades for you. You don't have to be sitting in front of your computer. You can go about your day just as you normally would. And this trading algorithm, trading bot will be placing trades for you in your account and hopefully be profitable in doing so. Something else that's really valuable, any of you with, I know William says about 5 years of experience in the markets. So you're probably familiar with the value of backtesting your strategies, right? Before you deploy real money, you want to make sure that historically the strategy you're using has been profitable. If it hasn't been profitable in the past, it's unlikely it will be profitable now, right? So if you're going to deploy your real hard-earned money into the stock market, then you want to make sure that you're putting your money behind something that is profitable. And so with backtesting, trading algorithms are tremendously helpful in backtesting. So anybody who's tried to backtest manually understands that it can be very tedious and time consuming. And just to run, let's say 1 year's worth of stock trades on like an hourly time frame can take hours out of your day to just do for one single symbol, right? So what a trading algorithm allows you to do is it allows you to backtest your strategy over hundreds, if not thousands of stocks and in options in this case as well. And it allows a lot more flexibility with that because it saves you so much time. So what would take you probably an entire day to do manually, it would take a trading algorithm a matter of a few minutes to pass through and develop in a backtesting framework. So as a trader, it's extremely valuable. It allows you a lot more knowledge, a lot more insight into your strategy. It allows you to optimize strategies as well. So you might have something like a stop loss where you say, okay, if a trade is losing $100, then I just want to cut it off. I'm not willing to lose any more on the trade. But you might test out and say, okay, what if I was willing to lose $125 maximum on a trade? How would that affect performance? You may find out that in the long run would make your strategy profitable. So backtesting with trading algorithms allows you to tweak those parameters with the trading strategy and really fully optimize your system as well. Furthermore, it takes emotion out of trading. So anyone who's been in front of the computers, been trading with your real money, You know that it can be, you can get greedy if things are going well. You want more and more. You see that dollar number going up, and you want to make more, right? So it's hard to close that out because the excitement is probably taking your decision making in maybe an illogical direction, but we all deal with it. The same is true with the downside, right? If you're losing money, you may end up making some poor decisions because nobody wants to lose money. You start getting fearful, going, "Oh, what if it keeps going down? How much I'm going to lose? I don't want to lose money." No one wants to lose money. No one likes to lose money. It's not fun. It sucks. And so, you get angry, get pissed off. You can get, a little scared that you're going to start losing more, and then probably make some poor decisions based on that. So obviously, a computer, a trading algorithm, trading bot doesn't have any emotion. It's just a simple set of rules, some code, and it's not gonna start freaking out or sweating or cursing when things go bad. It's gonna follow whatever system works well. So that's really valuable. And then even if you can handle the stress or the ups and downs of everything, if you can set up a trading algorithm to do it for you, you don't even have to go through that. You might watch it on a day-to-day basis, but if you just let go and let the system run its course and follow the strategy, then you can avoid some of that emotion that comes along with trading, and that's inevitable. That's in our human nature. I don't care who you're talking to. If they say that they are completely emotionless when they're trading and have been for their entire trading tenure, then they're lying to you. That's just not possible. Another reason you'd want to trade options with algorithms is to trade several strategies at a time. So obviously we are limited to our 10 fingers, our two hands, or if we want to hire more people, their 10 fingers and two hands and one brain as well, right? We only have the capacity to look at so many charts at one time. We have the capacity to click so many buttons at one time. So trading algorithm can actually monitor a much larger bucket of stocks and options than you as an individual can, or really even a team that you want to hire out if you're a fund can do. So this allows you to trade a number of strategies at a time, kind of diversify in those strategies if you want to go that route. And monitor a number of different opportunities that you wouldn't be able to as an individual. And then lastly, fast execution. There's a number of other benefits to this, but just for the sake of time, we're not going to just keep hashing this out for an hour. Fast execution. So mentioned really briefly some market making and high frequency trading opportunities. So a trading algorithm can obviously hit buy and sell much faster than you can as an individual. So that opens up a lot of opportunities in the markets that you as an individual wouldn't necessarily have, right? Because again, we're limited. We're human beings. We can only push our physical beings so far. Computer can compensate for some of those shortcomings. Let's move on from that. So I'm going to show you guys a couple of demos here. First off is going to be a simple call buying strategy. I mentioned this really briefly towards the beginning of our call. There's no rhyme or reason for why this is buying the calls. It's just simply to show you guys how we can set up a set of code to then place trades in a brokerage. In this case, we're going to be trading with Interactive Brokers and their Trader Workstation platform. They have great connectivity and integration to LumiBot, which is what we'll be developing in. It's an open source trading framework in Python library provided by LumiWealth and our team. So you see how we do that. I'll talk through it when we get to that point as well. And then I'll show you a code snippet of something that's a bit more complex. We won't dive into it in full, but this is just to give you an idea of something that we'll actually be developing in the course, in the full course over those 8 weeks. And that's going to be the strangle strategy. So I mentioned briefly a little bit ago and talked through the strangle strategy, where you buy both calls and puts, and then can be profitable regardless of the direction that it moves, which is exciting. So we'll show you a quick snippet of that. We won't dive too deep into it, spend too much time on it. You can take a second here. Okay. So this is the simple call buying strategy. This is the top portion of the code. Don't worry about, we're not going to dive into this, or I'm not going to overwhelm you guys with it by any means. But just super briefly, you can see where we are identifying which options contract we want. So we're choosing Apple. The date time, recorded this a little while ago, is 2022, 11/11. So that's going to be the expiration date. The strike price is going to be, it says 140. It's going to be a call. So that's what we want to select and end up trading. So you can see how we're initializing and determining what we want to trade in the code. And then we're going to end up submitting that to the broker. So we'll show you how that works in this video here. So before I launch this, just to break down, that's on the left-hand side, this is the same code that you saw on the last slide. If for any of the traders in here, if you're familiar with Interactive Brokers and their Trader Workstation platform, this is it on the right here. So what's going to happen is I'm going to play this video, and I'm going to have launched this code by hitting this run button here. And so what it's going to do is going to run through my code and interface with Trader Workstation here. So I think I said it's 5 seconds or so, it's going to buy that call contract that I told it to, with that strike price, that expiration date. And then on the right-hand side here, you'll be able to see those contracts and those orders actually being placed within Trader Workstation. So I'm going to go ahead and launch this. You can see how it works. Again, I'm not going to overwhelm you guys with too many details, but just to give you an idea of what we can accomplish at a real basic level. This is it. Order filled. So you can see the first order come through, and on the right hand side you can see it as well. Order filled. There's another one. You can hear the nice British gentleman telling us that order has been filled. Order filled. There he goes again. Order. There we go. So again, no rhyme or reason, no real strategy there, just to show you guys how we can write some code that will then place trades within our brokerage account for options. So pretty exciting there, right? I could have gone off to the golf course and let this keep running, and it would have kept buying options contracts for me. So if you're into golf, love it. You know, if you have a day job and you don't necessarily have the time to watch charts all day, you know, very few of us do. You know, it makes it very exciting to have a trading bot that can do that for you. Let's move on from that. This is something that's a bit more complex. And again, this is just a code snippet. This isn't all of the code or anything. But this will just give you an idea, again, with the strangle strategy that I've talked through. That will give you an idea of just something that's a little more complex. And as we go through the course, this will be something that you'll learn how to develop and really gain an understanding in and gain some confidence developing as well. So again, don't worry about this too much. I don't want to overwhelm you guys, but again, just give you an idea of where we're going to take you, the skill set you'll gain with the course here. So let's move on from that. So let's talk about the course for a little bit here. So I'm going to go ahead and let's switch screens here. Let's see. Give me 1 second here. I'm going to launch this over to LumiWealth.com. And we'll show you guys what we have going here. Okay, so here we are. This is the LumiWealth website. I'm going to walk you through what we're going to cover with the course. Again, just talk briefly about some of that, but we'll dive into that a little deeper here. So first off, what are we going to do with the course? We're going to learn fundamentals of options trading. So again, you know, can be a little complex. So we're going to spend some time really diving a little deeper into the options trading and learning how options work. And then we're going to learn how to backtest our option strategies. We're going to use historical data and see how strategies would have performed with that historical data. Now we're also going to learn how to build a robot that trades options. So we're going to go through coding. I know Tim mentioned that doesn't have any experience with code, so we'll go through that and build kind of a foundation as it pertains to developing these trading algorithms and learn how to do that. And then we'll build a working trading bot that you can use. And we'll make sure you're left with that. So the curriculum, it's going to be an 8-week program. So part 1, the first 3 weeks is going to be course introduction. So some of the things we're going to do is we're going to get acquainted with each other, learn a little bit more about each other. Again, it's great to have a community of people that you're working through this with, some people to bounce ideas off of, ask questions to, and whatnot. Obviously, I'll be available for questions and everything, but just to have other people in the group, then we'll do that. So Tim asks, I'm assuming when you teach the course, we will be able to see code in larger view. Couldn't see much with your example. Yeah, so we'll actually give you the code, the full set of code, Tim. We're gonna set you up so this first week part of it is gonna be system setup. This third part here. So we're gonna make sure that you guys all have your computers set up so that they can run these. And then we'll actually give you pre-built code for some of these strategies. And you'll be able to see it in front of you. We'll dive fully into it. We'll go all the way through it. And also allow you the time to develop some of these on your own. So week 2 is going to be options fundamentals. Again, we're going to talk more about options within week 2 or 3. Call and put options, difference there, profit payoff. We'll have a Q&A session. Week 3, we'll dive into different strategies. Mentioned strangle strategy a bit. We'll talk about callers, straddle, covered calls, all kinds of different strategies that we can deploy with options trading. And then we'll talk about the Greeks and how some of these are priced and how to read those and how to implement them in your trading algorithms as well. Then we'll dive into part 2, starting in week 4. That's going to commence with options, live, and paper trading. So we'll move on I guess we'll move into actually trading these in a live market, which is exciting. So we'll set up an account. We'll link to the broker, just like I showed you in that integration and connection between the code base that you guys will have and that I showed you, and interactive brokers and trader workstation as one option, right? So we'll go through, make an account, link to the broker, verifying accuracy, simple example strategy. So this will be one of those strategies that we'll just send you. We've already developed ourselves. We'll give you some of these strategies as part of the course, and you'll be able to deploy that. And if you want to build off of it or just use it to see how it works, you'll have that. And then again, wrap it up with Q&A. Then we'll dive into backtesting and options backtesting. So we'll walk through how to get data for your backtesting. We'll set up the parameters for backtesting and go through that with an example strategy. We'll do Q&A beyond that. And then part 3, starting in week 6, is going to be example strategies. Again, we'll dive into other strategies. We'll deploy that just like we talked about in part 2, where we do live and backtesting. And then we'll do a workshop for those 2 weeks in weeks 6 and 7, so that if you guys have trading ideas or ideas for trading strategies, we can really work through code and kind of help you guys walk through and work through developing some strategies that you have ideas on, and really go through this together so that you can really fully gain an understanding on how to do this stuff on your own, so that after those 8 weeks that we're with you, you'll be able to jump off on your own and not need any guidance from us to develop these on your own. And then week 8 is going to be futures trading. So if anyone's familiar with futures trading, there's actually options for futures as well. It's not just stocks, but also futures. So we're going to talk about how futures works. They're the basis of them in general is similar to options in that they are contracts for futures rather than equity in something like a stock would be. We're going to go through back testing an example strategy, and again, this will be another example strategy that we'll just give to you guys as part of the course, and then we'll go through trading the example strategy. And at that point, you guys will have gained enough understanding to really know options, really know how to develop these in algorithmic trading form, and go from there. So the plans, it's three different plans. First is self-directed plan. Next is live classes, where you get to interface with myself and the rest of the group. And then also the project help and tutoring plan beyond that. So to go through these just in a little more detail, the first is going to be self-directed course. That really is for people who probably have a strong understanding of options and a strong understanding of programming already. Reason being is that you're not going to be able to communicate directly with an instructor in a typical class setting. Where we're going to get into that is the live classes package here. So that's going to include everything from the self-directed plan. It's going to be past videos that we've recorded. It's going to be 8 weeks of live classes. So it's going to be those 8 weeks that we just went through. We're going to do 2 hours per week. And then there will be 6 hours of dedicated live Q&A. So I know some of you are varying skill levels with this stuff. We're going to give you guys ample time to ask questions, to get help with all this stuff. Really want to make sure that we're leaving you with the skill set to fully and effectively develop this stuff on your own at the end of the 8 weeks. And then it'll give you access to all future videos and code as well. So I mentioned with the course, we're going to go through a bunch of example strategies like that strangle strategy that I showed you. You'll get that code. We're just going to give you that code for you to run on your own if you want, or play around with it, test it, whatever you want to do with the code. When we develop code in the future for other things, you'll get that as well as part of this. And then help with 2 personal projects. So again, if you have trading ideas, strategies you want to implement, we'll go through that with you and help you out with it. Again, one of the things I mentioned, just getting to know other classmates, other people in the group that are going through the same thing you are. I think it's really great to have a support system and kind of have a team that you're working through all this with, which is great. Unlimited email and chat Q&A. Just send me emails whenever you want. And then help with resume and interview prep. Some of you may be jumping into this as kind of a boot camp to try to get a job in the algorithmic trading space, right? If you have a resume that you want us to take a look at, or an interview that you're have coming up and want to ask some questions, happy to help out with that. So beyond that is going to be the project help and tutoring phase. This will probably be best suited if you don't have development experience or you don't have trading experience. This is going to give you even more access to myself directly. It's just going to give you everything from the previous 2 plans, but it's also going to include, I think most notably, 10 hours of one-on-one video phone sessions or software development time. With myself or someone else on the team. So what a lot of people have used that for in the past is, and I've actually been the one to develop a lot of these, is a lot of past students in here have said, okay, we have a course coming up here in a month. I want to come into this with some code because I'm trading a strategy already. I want to come into this with my own code that I can play around with, work with. So I want to have you guys, Lumi Wealth, or myself, probably likely be myself doing this. I want to have you actually develop my strategy for me, so that when I come to the course, I already have something set in stone that I can play around with. So if you want to do that, I know a lot of people have found a lot of value in that. So there's 10 hours of development time. It'd be more of a simple strategy if you have a simpler strategy, but we'll actually develop a custom strategy for you so you can go into it. Or if you just want to use those 10 hours for one-on-one phone sessions or Zoom video sessions with myself or another expert on our team, just to get additional help beyond the course, you can go about it in that way as well. So to let you guys know when we're starting this, it's coming up quick. So registration is actually going to close in 9 days, February 15th. So it's coming up quick. I know we've had a lot of people join already. So if you are still on the fence or waiting, don't have a whole lot of time to decide from here, but would definitely love to have you in. The course is going to start February 22nd. And that will commence the 8 weeks, right? So very excited about that. It's going to be about 8 to 12 hours per week. It's going to be self-paced learning. So class schedule is going to be every Wednesday at 8 p.m. Eastern time. And then again, the lecture duration is going to be 2 hours per week, live over Zoom. So would love to have as many of you guys in there as possible. And with that said, let's jump back into the remainder of the presentation here. I think we're probably about wrapped up and might get to some additional questions. So if any of you guys have questions about anything we've covered, anything about the course, you maybe want to recap real quickly what we have. Yeah, so here we go. So yeah, end of it. I'll give you guys a minute or two here to ask some questions. Anything you want me to touch on about the course, anything that maybe has come up in your mind that you hadn't thought about previously, but just want to ask, whether that's with options or algorithmic trading with options or anything about the course, feel free to ask away. So I'll give you guys a minute or two because like I said, I know there's a little bit of a delay in the chat here. So. And with that being said, I hope you guys have found this valuable. Try not to overwhelm with too much information or anything, but definitely hope that this was valuable for you guys, and hope you guys gain some knowledge, if anything, from me as we've gone through this. So appreciate you guys hanging around and hearing what I have to say. And again, I hope it was valuable for you. Let's just wait here a second or two, see if anyone has a question, anything else they want to add or touch on, and we'll jump through it and get to wrapping this up. So again, really appreciate all you guys for hanging in here and chatting with me. Great meeting you, some of you guys, Zachary, William, Tim. Great meeting you guys. Getting to hear about your background really briefly. Really cool to see such a wide variety of backgrounds that are interested in algorithmic trading. My background personally was actually, I went to school for marketing and then got into trading while I was in college, and then ended up making that my career. So you never know when opportunity is going to come and you want to make something new a full-time gig, or so it can really be whenever. So William says, thanks, Nathan. Yeah, absolutely. Appreciate you, William. Thanks for hanging in here. Hope you pulled some value out of all this, for sure. So yeah, with that being said, hope to see some of you guys, or hope to see all you guys really in the course when we start on the 22nd. Going to be really cool. Going to be really exciting, and we're going to have a lot of information we're giving to you guys. And at the end of it, I think you guys will have I know you guys will definitely come away with a very valuable skill set that not a lot of people know how to do. Developing these trading algorithms is really valuable. Not a lot of people can do it. So at the end of it, I think it'll be great. And then so that being said, thank you guys again for being on the call here. Hope to see and communicate with you guys further beyond this. And with that said, I hope you guys have a great night and have a great rest of your week. So take care.